Good afternoon, everyone. It's Coram and Ed Carson with a look at the stock market for Friday, March 31st, where we saw the stock market rally continue to pick up steam on this last day of Q1, Ed.
Yeah, really strong action for the week, starting with Wednesday. A lot of stocks flash buy signals today, and during the week on today, we had ServiceNow and Tesla flash buy signals, but we also had Aehr Test Systems show that there's still risk out there.
Exactly. Yeah, not all sunshine out there, but we'll take a closer look at those three stocks. But first, let's take a look at the major indexes. So really ramping up today was the NASDAQ up 1.7%, followed by the Russell 2000 up 1.6%, the S&P 500 up 1.4%, and the Dow managed a gain of 1.3% today. So as you mentioned, Ed, it really kicked off on Wednesday, this market rally kicking back into high gear. We then saw the NASDAQ get above that round number at 12,000. And now it looks like we are getting awfully close to that February high, just a couple of points away.
Yeah, I actually hit a closing high, or not closing high, but the highest close since September. And in some ways, the action really started on Tuesday because we found support near the 21-day line and the 50-day line and came off of there. Some of the other indexes showed some positive news as well. Yeah, look, it just takes a few days and all of a sudden things look a lot better. The index is really strengthening, starting to break through key levels, as you're mentioning. A lot of leading stocks coming out. On Wednesday, we staged a follow-through day on the S&P and NASDAQ. Signaling that it's a confirmed uptrend. It's a sign that institutional investors are taking part in this rally. With bank fears ebbing and Fed rate hike fears not really coming back. The Fed is probably not going to raise rates as much as we thought a few weeks ago. Those are positives for the market from where we were just a couple weeks ago.
Exactly. So this week was definitely a week to be adding back exposure, Ed.
Yeah, it definitely was. And this is why you want to get going on it. Yeah, that's never a perfect time to go, but you want to get started so you can do it gradually. So if, say, we had reversed today, you'd already taken some exposure and you didn't jump. You don't want to go from 0 to 100 in one day, and you don't want to wait till we get to all-time highs. That's way too late. So we try to find a middle ground with a follow-through day, which says, hey, you want a few days, and this time it was a little bit more than a few days, but a few days until you get some real sign of strength, but still early enough that you can really take advantage of it. And that's, if you were doing that these last few days, definitely a lot of buying opportunities.
And we don't know what Monday holds. We don't know what the future holds, but we know from history that looking at technical analysis and using the index action and the action for individual leading stocks underneath the surface is so important to guiding how we're positioned in the market. So that's such a great point there, Ed. And also, I think, there's still a lot of worries out there, a lot of concerns, but that's another thing that history shows us is that the market can really start making a move to the upside in spite of a lot of gray clouds and negative headlines. So
yeah, you want a wall of worry, the kind of thing that you need people to come off the sidelines. If everybody's excited, then who's left to buy is sort of the issue there. So you want some of that. You don't want this panic, the world's going to come to an end kind of worry like we had sort of those fears a few weeks ago. But it's nice to have people still concerned, still worried a little bit as you go up in a rally.
Yes. Okay, let's take a look at the compelling action for the S&P 500 this week on Wednesday when it staged a follow-through day, clearing a trend line, the 4,000 level and the 50-day line. So a bit of a trifecta there. And now getting above its peak from earlier in March, above that 4,078 level. So now it seems like next stop could be what, 4,200, even 4,300. Some of the market experts we're speaking with have said.
Yeah, those are key levels. It could be that's where we hit resistance temporarily, or it could be more important. But yeah, you can also see this is how it's such a turning point. Where the NASDAQ, yes, it was nice, but wow, we were in this area where one more bad day and start getting really worried again because we were close to going underneath the 200-day again. Just on Tuesday, it was like, oh boy, it's not looking great. But to see that turnaround and breaking all these technical levels just sort of really set off a lot of reasons to be positive about this market.
That it did. We'll also just very briefly look at the Dow and the Russell 2000, but a significant development here with the Dow because it now is back above that 50-day line. It hit resistance there on the 6th of March. So seeing it get back above that level is nice to see because it had been a laggard and had gotten hit really hard and down well below the 200-day line. So getting back up on its feet. And then also the Russell 2000, which is tracked by the IWM ETF, back above its 21-day line and now approaching its 200-day line. So any thoughts on what we're seeing in terms of small caps and blue chips? It seems like indicators are showing that breadth is improving.
Yeah, that's I think the biggest thing. And obviously the Russell really hit hard by banks, but still starting to see that breadth improve, which was definitely a concern because, and also even just things like if you look at QQEW, that had a pretty good week. That's an equal weight index, and you see that's coming up quite a bit. Actually, had a better week than the Qs. I mean, because it was a market that was just getting concentrated in like 3 stocks or 15 stocks, and so growth is broadening out. But the whole market, you're starting to see that breadth, which is really important for the health of a rally.
Mm-hmm. That it is. Okay, let's take a brief look at the 10-year Treasury yield coming off a bit on Friday for the week, up about 3.4%, but off its highs.
Yeah, so even though it came up, we're not coming, it's still way off the highs from just a few weeks ago. So that sort of reflects we're not so worried about the banks, but we're probably not going to see as many Fed rate hikes for a variety of reasons. But net, that's a fairly positive action by Treasury yields this week.
Yeah. And so you mentioned financials. So let's take a look at the XLF ETF here, up 1% on Friday, 3.7% for the week. KRE up just 0.7% for the week. Meanwhile, to put things into perspective here, QQEW up 4.3% for the week. SPY up 3.4% for the week. So not a bad gain there for XLF, outpacing the S&P 500's gain. But should we be worried about regional banks here, Ed?
That's still something to be watching out for. It's still possible that, maybe slowly the deposits will drain out and then it'll become a rush again. I mean, there's also the concern maybe that bank stocks will just not be poor. It could be that there is a scenario where banks are fine, but the bank stocks struggle because they're going to have to pay more for deposits and stuff. And so bank profitability will be much lower. So, you can, but still, you'd really like to see the banks bounce a little bit more. That would be one area to be looking for.
Yeah, at least they're holding, but yeah, we'll keep tabs on this area. We also want to check out chips. Here's SMH up 3.4% for the week as well, now up 3 weeks in a row. So continuing with that relative strength and some nice volume. The prior 2 weeks, perhaps not above average volume this week, but money still flowing into chips, Ed.
Yeah, this is a leading sector. It's really great to see chips do well. There are so many chips doing well. It's really amazing.
Yeah. And now IGV, this is the tech software ETF, having a really great week this week, up 4.6% and breaking out of a bottoming base.
Yeah, I mean, there's some big names in there that have really been helping, but this was a big week for software. Again, broadening out, tech broadening out everywhere. So nice to see a lot of names in here.
Right. And generally speaking, with a lot of areas of the market, whether you're looking at these select sector ETFs or again, the major indexes, and you study stage analysis, we finally are seeing more of an uptrend here, not just an attempt at finding a bottom. So that coupled with a lot of the compelling action underneath the surface does seem to support that we could be headed higher. Could we ping pong and chop around? Yes, that is definitely in the cards too. But no doubt we have seen continued encouraging signs this week.
Yeah, that's an excellent point.
Okay, next, let's take a look at ServiceNow. So speaking of software, let's take a look at ServiceNow, up 7.2% on the week as it forges a bottoming base. But not only that, a potential early entry this week as it bounces off of its moving averages and clears a trend line within the base ed.
Yeah, I thought it was really strong action day. It just came on, the volume kept on coming on, and the gains kept on coming on in this day. So that was nice to see. It broke above the 50-day line, broke above short-term levels, it broke above a downtrend you could probably draw in there. So lots of reasons you could argue to be buying on this one. It's this is a big name. That's really a pure software name, like whereas Microsoft is an AI and stuff, there's other things that's going in cloud computing. This one really isn't there and sort of indicative of software coming back. This one has strong growth, strong and steady growth too. So that's that. And so it's nice to see this one. It had been a long-term leader, but really came under pressure the past year and a half. So nice to see a giant like this, taking its name among the leaders.
Yes. And next on our list, let's take a look at Tesla. It gained about 9% this week. Looks like volume was lighter than average on the week. But if we look at the daily chart, Friday's volume was the highest volume in a couple weeks here, half a month or so, and a clear breakout from a cup with handle base. Only problem here, Ed, is that it's now coming right up to the 200-day line.
Yeah, that was the one thing, and we were talking about this on IBD Live, and obviously today, if you bought it right around that buy point, you're up a few percentage points, so that would work. But it's
when we
not.
were talking about it on the show, it was still,
It was still on
still
the
had
way.
legs throughout the day.
So it definitely did, but it's only about 4 percentage points away from the 200-day line, which is also right around the recent peak. So this could be a resistance area. Now, maybe it's a temporary resistance area. Maybe it's not a resistance area at all. So, I mean, it doesn't mean that it has to be a negative for this. So, but that's just one caveat in there, because it's like the moment it's sort of like you're breaking out, but then you have another ceiling like right above you. That just is something to watch for. Over the weekend, we're going to get Q1 deliveries from Tesla, and a lot of it's China EV rivals. So that could be a catalyst either way. So that's something to watch out for this weekend. But nice action here. It did have a nice bottoming base, and it's holding up. It's just that's just the one area there that you'd like. And the unfortunate thing is, if it breaks over the 200-day line, then it'll be up like
extended.
Extended. So that sometimes happens, and sometimes there's not. Sometimes it's like Arusha and Scott St. Clair. They'll say like the market doesn't always make it easy for you. So this might be one of those cases. Nice action today, though.
Yeah, we'll have to see what happens if there's a reaction for the stock on those delivery numbers over the weekend. And also, I think, to just echo your point about the potential resistance, that doesn't mean that it's for sure going to be a ceiling for the stock, but it's a test. Will it pass the test, or will it fail the test? Will it take a little while to get above there? Will it be a challenge? Will it be easy? We'll have to see. And now let's take a look at AEHR, which did not fare so well by the end of the week, down 17% on Friday in reaction to its quarterly earnings report, which on the face of it looked like it was a good report, Ed. But this is a stock that has made such a huge move since last summer, and the last 3 earnings report up 20% plus each time. So investors were in for a big move one way or another with this one. And this time, traders didn't get the move higher.
No. I mean, growth slowed a lot, but a lot of that's just tougher comparisons because there's really easy comparisons earlier. It just, they beat views that on the face of it looked fine, but fine just wasn't enough for this, obviously. And if you look intraday, it tried to make a bounce back. It was looking like it was going to bounce back to the 50-day line. It got right up to it, basically, because that was the high of the day, and then slumped back towards the lows. And so you just don't know. I mean, that's one of those things why getting into earnings, it's hard to win out on those situations, because you can be shaken out, or you can sell at just the wrong time, or hold on and think you're going to be getting a bounce back, because this has bounced back at various times. It did a few weeks ago and had a horrific sell-off, on some weird news. But yeah, so still have to watch out for earnings, especially with volatile names like this. And so
Mhm.
there's still always those risks. This is also a reason not to get too concentrated. If you
Yeah.
had a, if yeah, you don't want to have half your position in this one stock. That would be turn this into a disaster. If this happened to be a stock that you had a decent gain on, this is really, it's unfortunate, but then you can move on. Uh, but that's just something to watch out for. Just remember, just because it's a risk on market doesn't mean that risks are entirely off.
Mhm. Well said, Ed. All right. Well, as we wrap up, what should the game plan be for the week ahead? It seems like investors should be assessing their portfolio exposure at this time and see what stocks are looking strong, potentially actionable. But now it seems like we're at a point in the market where, is this rally really going to start getting up and going? Or now that we have made a pretty solid move, at least in tech land over the last couple of weeks, is the market going to be due for a pause here? Because the S&P looks like it has room to run, but is the NASDAQ now going to take a breath? Are we going to see sector rotation? I guess we got to keep an eye out for that too.
It could be, which is another reason why we hope to have some market breadth in there so the rotation isn't so fierce. It wouldn't be shocking to see the NASDAQ come back and test the Qs test those February highs, or some of these areas, or the NASDAQ hit resistance there and then come back to the 12,000 level or around there. Ground a little bit, giving back a little bit is fine. If you go 2 or 3 steps forward and 1 step back, that's okay. So yeah, you have to watch out for that, but definitely a time to be refashioning those watch lists. As you say, we're looking at the ones that are setting up, or, in buy areas now, but also keep an eye on stocks that are coming up, because if this market does have legs, it won't be too long before some of those names and some of those sectors come up, that ones that may have gotten taken a little bit more of a hit. So definitely be doing all that. And, this is the time to be definitely involved and engaged in the market for sure.
Yeah. And it's also not the time to have FOMO and to chase extended stocks, assuming that the market rally is going to continue, because even the leaders eventually, they are not all of them, but there will be some that will pause and take a breath and offer an entry to get in. So now we just got to be patient. We've got to keep those names on our list and just track them and see if we can get the right pitch to take a swing again.
All right. That sounds like, yeah, we're already excited about Monday, which maybe should be a reason to calm down just a
Temper
little
the
bit.
enthusiasm. All right. Thanks, Ed. And thanks everyone for tuning in. We'll be back with more on Monday, starting with IBD Live. So make sure you are tuning in, investors.com/IBD Live, for all the details. We also will be joined by one of IBD's product managers, who's going to give a walkthrough of the IBD Options Trader app. And we'll be able to ask him questions. And so I'm really looking forward to that. So we'll see you there on Monday, and then we'll also see you here after the close as well. Have a great weekend, everyone.